Imagine walking through the aisles of your favorite supermarket, picking up familiar brands, only to discover that most of them are owned by two colossal investment firms, BlackRock and Vanguard. This startling revelation sets the stage for an exploration of their profound influence on our daily lives. With assets exceeding $10 trillion, these firms have become the silent giants behind the scenes, shaping not just the products we buy, but also the very fabric of the economy. As we delve deeper into this documentary, we will uncover the extent of their reach and the implications of their dominance in various sectors. From grocery shelves to corporate boardrooms, BlackRock and Vanguard's power extends far beyond mere financial investments. Join us as we navigate through the intricate web of corporate ownership, revealing how these firms dictate market trends, consumer choices, and ultimately, our economic future. BlackRock and Vanguard, two titans of the financial world, have a fascinating history that dates back to the late 20th century. BlackRock was founded in 1988 as a risk management and fixed income institutional asset manager, while Vanguard was established in 1975, pioneering the concept of low-cost index funds. Over the years, both firms have experienced remarkable growth, driven by an increasing demand for investment management services. Today, they collectively manage assets exceeding $10 trillion, a staggering figure that underscores their influence in global finance. This immense wealth not only shapes investment strategies, but also impacts the broader economy, affecting everything from market trends to consumer behavior. As we delve deeper into their operations, we will uncover how these firms have become key players in shaping financial landscapes, wielding power that extends far beyond mere investment returns. As we delve into the heart of bustling stock markets and sleek corporate offices, we witness the dynamic forces that shape our global economy. BlackRock and Vanguard have emerged as key players, wielding immense influence over countless industries. With their staggering assets, these firms have become synonymous with financial power, driving decisions that affect millions of lives. The fast-paced environment of trading floors showcases the relentless pursuit of profit, where every transaction echoes their impact on markets worldwide. Corporate offices buzz with activity, reflecting the strategic maneuvers these giants employ to maintain their dominance. Their investments extend far beyond mere numbers. They shape the landscape of industries, from technology to real estate. As we explore this interconnected web of finance, it becomes evident that the actions of BlackRock and Vanguard resonate through every corner of the economy, highlighting their pivotal role in determining the future of global markets and everyday consumers alike. The influence of BlackRock and Vanguard extends deeply into the housing market, reshaping prices and availability for everyday individuals. In recent years, these firms have invested heavily in residential real estate, acquiring thousands of single-family homes. Statistics reveal that since 2020, BlackRock alone has purchased over 50,000 homes, driving up prices in many neighborhoods. This influx of corporate investment has led to a surge in housing costs, making homeownership increasingly unattainable for average families. Visuals of rising for sale signs and bustling open houses illustrate the stark contrast between corporate acquisitions and the struggles of potential homeowners. Furthermore, data indicates that in some markets, rental prices have escalated by more than 20%, exacerbating the affordability crisis. As these firms continue to dominate, the question arises: who truly benefits from this investment frenzy? And what does it mean for the future of housing accessibility? As we shift our focus to the technology sector, it becomes evident that BlackRock and Vanguard hold significant stakes in major tech companies like Apple, Microsoft, and Amazon. These investments not only provide substantial financial returns, but also grant these firms considerable influence over innovation and consumer choices. With their extensive portfolios, BlackRock and Vanguard can sway the direction of technological advancements, shaping the products and services that reach consumers. For instance, their voting power in shareholder meetings allows them to advocate for sustainability initiatives or data privacy measures, impacting how tech companies operate. This influence extends to the development of emerging technologies, such as artificial intelligence and renewable energy solutions. As these firms continue to invest in groundbreaking innovations, they play a pivotal role in determining which technologies thrive and which fade away, ultimately molding the digital landscape that affects our daily lives. Corporate governance is the system by which companies are directed and controlled, and it plays a crucial role in shaping business practices and policies. BlackRock and Vanguard, two of the largest asset management firms in the world, wield significant influence through their voting power in major corporations. With combined assets exceeding $10 trillion, their decisions can sway board elections, executive compensation, and corporate strategies. This voting power allows them to advocate for sustainability, diversity, and long-term growth, impacting not only individual companies, but also the broader economy. By exercising their rights as shareholders, they can push for changes that align with their investment philosophies. However, this concentrated power raises questions about accountability and transparency. As these firms navigate corporate governance, their influence extends beyond financial markets, affecting employment, innovation, and even public policy. Understanding their role is essential in grasping the dynamics of modern capitalism and its implications for society. The influence of BlackRock and Vanguard extends far beyond the corporate realm, significantly impacting global governments. Their substantial investments can sway policy decisions, as these firms often hold significant stakes in various industries that shape national economies. For instance, when BlackRock or Vanguard invests heavily in renewable energy, it can lead governments to prioritize environmental policies, potentially reshaping energy regulations. Conversely, their interests in fossil fuels might hinder progress in climate initiatives. This duality poses a challenge for policymakers who must navigate the delicate balance between economic stability and corporate influence. Additionally, with assets totaling $10 trillion, their financial power can create vulnerabilities in economies, as countries may feel pressured to align with the interests of these investment giants. The implications are profound, as the decisions made by these firms can ripple through economies, affecting everything from employment rates to social welfare programs, ultimately shaping the lives of millions. As we delve deeper into the influence of BlackRock and Vanguard, let us examine some compelling statistics that underscore their reach across various sectors. In the housing market, BlackRock and Vanguard collectively own over 200,000 rental homes, significantly impacting housing prices and availability. In technology, they hold substantial stakes in over 50 major tech companies, including giants like Apple and Google, shaping the future of innovation. In the energy sector, their investments exceed $100 billion, influencing the transition to renewable energy sources. Furthermore, these firms control approximately 15% of the total market capitalization of the S&P 500 index, a staggering figure that highlights their dominance. Their combined assets under management are over $10 trillion, illustrating their overwhelming presence in the global economy. These statistics paint a vivid picture of how their financial power permeates various aspects of our lives, reinforcing the narrative of their significant influence. In a recent interview, economist Dr. Emily Chen emphasized the dangers of concentrated financial power, stating, "When a handful of firms control vast resources, it can stifle competition and innovation." This sentiment is echoed by financial analyst Mark Thompson, who warns, "The influence of BlackRock and Vanguard over the economy poses risks not only to market fairness, but also to democratic processes." Experts argue that such concentration can lead to systemic risks, where the failure of one entity could trigger widespread economic instability. Dr. Sarah Patel, an economist specializing in corporate governance, notes, "The power these firms wield can overshadow the interests of smaller businesses and consumers, creating an imbalance. As these firms continue to expand their reach, the implications for economic equity and transparency become increasingly critical." The voices of these experts highlight the urgent need for discussions about the future of financial power in our society. As the influence of BlackRock and Vanguard continues to expand, public perception has become increasingly critical. Many individuals express concerns regarding the transparency and accountability of these financial giants. Critics argue that the sheer size and power of these firms create a lack of oversight, allowing them to operate with minimal scrutiny. This raises questions about their decision-making processes and the potential for conflicts of interest. Moreover, the opacity surrounding their investment strategies fuels skepticism among the public, who often feel disconnected from the financial systems that govern their lives. Activists and watchdog organizations have begun to voice these concerns, advocating for greater transparency and demanding that these firms disclose their operations in a more accessible manner. As the conversation evolves, it becomes clear that the public is not just a passive observer, but an active participant in the dialogue surrounding corporate governance and ethical finance. In recent years, activism has emerged as a formidable force, challenging the status quo of corporate governance. Grassroots movements and advocacy groups have mobilized to demand greater accountability from firms like BlackRock and Vanguard. These activists highlight the need for transparency, urging these financial giants to consider the social and environmental impacts of their investments. Campaigns focused on climate change, racial equity, and workers' rights have gained momentum, pressuring corporations to adopt more responsible practices. Shareholder resolutions and public protests have become common tactics, showcasing the collective power of concerned citizens. Organizations such as Shareholder Advocacy and the Interfaith Center on Corporate Responsibility have played pivotal roles in pushing for reforms. By amplifying the voices of marginalized communities and holding corporations accountable, these movements are reshaping the landscape of corporate governance. Ultimately, activism serves as a vital check on corporate power, fostering a more equitable and sustainable economy for all. As we look ahead, the future of finance and the economy raises critical questions about individual agency and wealth distribution. When a handful of firms like BlackRock and Vanguard wield such immense power, what does it mean for the average person? The concentration of wealth in the hands of a few can lead to a widening gap between the affluent and the rest of society. This disparity not only affects economic stability, but also influences the quality of life for millions. Individuals may feel increasingly powerless as their financial futures are dictated by corporate giants. The challenge lies in fostering a more equitable system, where diverse voices are heard and opportunities are accessible to all. It is essential to ponder how we can reclaim our economic agency and ensure that the financial landscape works for everyone, not just a select few. The future is uncertain, but awareness and action can pave the way for change. Let's challenge the status quo and work towards a future where economic equity is not just a dream, but a reality for all. The power held by firms like BlackRock and Vanguard shapes not only the economy, but also our daily lives. We must educate ourselves about these dynamics and engage in meaningful discussions about economic equity. Consider how these corporate giants impact your financial future and the opportunities available to you and your community. Take the initiative to learn more about corporate governance and advocate for transparency and accountability. Join local forums, participate in online discussions, and share your insights with friends and family. Every conversation matters. By staying informed and vocal, we can collectively push for a fairer economic landscape. Remember, your voice has power.